So how do we apply that knowledge? Well, we apply that knowledge by the fact that if you have the different time frames, okay, you have to be able to pick those that would match well in terms of will help you synchronize that thought. Okay? So, for example, if you use like the hourly time frame, well, then it's good to use a 5 minute time frame for midterm, and for short term, you can use the 1 minute time frame. Similarly, you can do 1 hour, 15 minutes, and 5 minutes. Now, normally when I do my trading, I mostly do 1 minute, 5 minutes, and 1 hour. But sometimes when the volatility is too much in the market, I actually do the 4 hour, 1 hour, and 5 minutes. So I use the 4 hour to confirm my direction where the trade is going. And then I use the 1 hour to make sure that I'm confirming that, okay, even if the market is going up, is the 1 hour also going up? All right. If it's going up, then I want my 5 minute to be going up. Otherwise, I will not trade it on a buy. But if the 4 hour is actually on a sell going downwards, going down, 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 then what I want the 1 hour to also be going down in general. And then the 5 minutes to be literally going down. But in general, what will happen will be interesting. Just like I've shown you, let me just see if I can redraw the idea again. So the idea is if the 1 hour is going down like that, okay, then sorry, if the 4 hour, if this is a 4 hour, then the 1 hour, will become. Can somebody mute?
No.
Hello?
Are
Can
you
somebody
hearing?
mute?
I'm telling her to go to mommy. She's just got daddy.
All right. We are being disrupted here.
Can they mute?
Go.
Hello? Okay. Can you hear me now?
Yeah, you are clear. I think it's not quiet. Thanks.
Okay. All right. All right. Sorry about that. I was trying to explain this idea of times. So the time frames, if I was drawing a map, let me see if I can redraw it again. Okay. So if this is the 1 hour, 4 hours, the market will be something like this, be going down like that, like that. So clearly it's on a sell down. So this is H4 or daily or weekly, it doesn't matter. The point is going down. So on a bigger time frame or smaller time frame, the 1 hour, you'll have a version of what is happening there in terms of the structure. So the 1 hour will probably go something like this. So as you can see, it's the same structure, but now repeated a few times. Okay, if You can do it like that. It's like repeated there, then repeated there, and so on and so on. Now, the 5 minutes, oops, I lost it. Anyway, but you get the idea. So the 5 minute will actually be the same pattern we have there, only this time it will start from there, and before it even goes up, it has gone up like that, and then come down a few times, and then do again thing going up, and then come down a few times, and then up, and then down. See, so each of these is a duplicate of what you have in the 1 hour, and so on. Okay, so if here there are maybe 12, maybe here there'll only be 5, and maybe in the bigger time frame daily will just be 1. So you'll have the mother of them all. So this in itself, if you look very well, is similar to this one's. So, but only here you have 5 instances of the same. Now, in terms of trading, it becomes strategic once you know that whatever is happening in the bigger time frame will happen in the smaller time frames just several times, and so on. Okay, so, and it doesn't apply only to scalping. No, it is not just scalping. It can be intraday, within the day. So for the, you can use the daily to check, then do the 4 hour to confirm, and then you can actually trade on the 15 minutes time frame. Now that is good because 15 minutes is not moving very fast. So, but in the 15 minutes, if something is happening in the daily, like the structure you have in the daily, maybe the hourly would have like 4 or 5, even 12 of them, because 24 candles. No, this is 4. So 4, is it 4 or 6? 6 of this form one of that. Okay, so whatever is happening in the daily might appear almost like 6 times there. If it appears 6 times there, and 15 minutes appears 4 times, so for every 1 hour you'll have 4 of these. Okay, but for 4 hours it will be 4 times 4, 16 times. Can you imagine the opportunities you'll have for trades? So what you've seen here will be appearing 16 times in the smaller time frame. That's why the power of trading as a scalper comes in handy, or within the day, because within the day, the structure you've seen in the daily will be repeated almost like 16 times. Okay, the first time you see it, then you see it again, and then you see it again. I mean, not exactly like that, they have put it, but similar. Okay, and that is the power of alignment. So let's go to the chart and see how practically that works out. So in the charts, what I was giving as an example, okay, let me stop sharing this. Okay, so I'm opening the charts. Now in the charts, we'll now have a similar thing. But for the charts, what we do, we try and use, well, I call them aids, or 2 indicators that can help. In terms of decision making, or it can help you make quick decisions. And that is, one, the support and resistance. Okay, so support and resistance will keep appearing so many times in terms of your strategies. So the sooner you know how to draw them, the better. So normally I start with a higher time frame. Okay, so I'll go here, I do the daily. Okay, because I don't do monthly. All right, so again, what?
Are you trying to share your screen?
Yes, have I?
Not
no.
yet.
Oh, okay. Sorry, let me go back. Sorry. Ah, yeah, I did not share the screen. Okay. Okay, sorry. What I meant to say was on the charts, what you do, you start by making your support and resistance. Okay, so your support and resistance on the daily time frames, that's what you do. You look for I told you what you do. You look for the turns where the market is turning. So these purple ones, for me, when I was setting up before, I would use the purple ones for, in fact, I think I should probably clear all this. Okay, all right. I know I've done this so many times, but for the sake of today, I will try and draw them again from scratch. So when you're starting to draw your support and resistance, don't think too much. Look at the chart and mentally ask yourself, where is the chart turning? Like it was actually going up, and then, so we start from the significant turns as you go down to the lower turns. So by significant, you mean that it is actually clearly a big turn. I'm trying to make this bigger. Anyway, so this is the obvious one, the big one from the top. Okay, so without even thinking, I'll pick that. Then I'll go to the last one, the bottom one. So whatever I can see in the screen. All right. Then from there, then I go now to the middle ones. I guess the order doesn't really matter, but it's up to you. So for me, if this one was coming up, the last high it reached was here. Okay, and then from there, it reached here and turned, literally turned. I'm ignoring this one here for now because it's not really, I'm taking this move from here to there as one time cycle. Okay, and then from here to there, I'm taking as one time cycle. And then from here to there, I'm taking as one time cycle. And then from here to here as one time cycle. So those places where it was turning significantly are the ones I am marking. So then I take from this down there as one time cycle. Already you start seeing it going back to revisit the support and the resistance. So up to here is another time cycle. So I can mark this one too. Okay, so even just by doing that, we've captured every time cycle. Okay, it goes there, comes revisit, goes back. Okay, this one I could put it, but no, I'll skip it for now, because it's small anyway. But it will appear again on a smaller time frame. So this is the daily. But if you're gonna be trading like the hourly, then you go to the 4 hours. That's 4 hours, and do the same thing. Okay, ideally, you should do now with a different color. Okay. Now, chances are you've already marked the big times, and there might be just a few places you might add. So if you look here, okay, and this is what I have, you should actually zoom out, zoom in, zoom out. Yep. So I'm zooming out. So I've zoomed out. So just by putting the daily, you can see we've marked pretty much everything except for a few here and there. Okay, and the few here and there, you can ask yourself whether you should ignore them or should include them. So let me see if I can add them. Okay, horizontal. So this one here, we can add them, but I want to change the color. I don't want it to be yellow now. We can change them to blue or purple, light blue. Let's go with the light blue. Yeah, there. Okay. So this is the 4-hour support and resistance points. So I go again. Okay. I'm okay with that. I'm okay. I can add this one here. Okay. Again, change it to that color. Okay. Then here in the middle, we can add. Oops. Where was that? I think it was here. Okay, I lost it. I think it was the middle one here. All right, and then there's one more in the middle there. And I think the point I tried to make in one of the previous videos that this support and resistance are actually not just lines, they're a zone. So don't think of it as a line, but when the market can come and may not even turn at that specific point, but somewhere around there. Okay, it's like when you go to a border of any two countries, there's no line that says, hey, this is the border. No. Of course, in the maps, it shows there's a border, but in general, it is a zone. So this is a 4-hour. So assuming that now you want to trade the 15 minutes or even the 1 hour. So if you go to 15 or 1 hour, let's take 15. We'll see how spread they are. If they're too spread, oh, now this is a problem of sometimes working over the weekend when the markets are not running. Oops. Let's try 1 hour. Okay. All right, so this is the 1 hour. And I can zoom in a little bit. Okay, so you use support and resistance, but then you also add an indicator. So no, we haven't talked about indicators so far, but there's what we call a moving average. And here you go here. Simple moving average, okay? And the period you want is 60. 60. Click OK. And it's supposed to track it. Okay, why is it not showing? Simple moving average. Oh, that's not good. We just lost everything we were doing. What happened to it actually reloaded and we lost everything we were doing. Oops. All right, anyway, the simple moving average, that's the simple moving average. And if I'm able to just, for the sake of explanation, try and put the support and resistance. Oh, there we go. We're back. Okay, there. So in this chart, every time you see support and resistance, okay, see where it has crossed. It has crossed the support and resistance. This moving average, where it's crossing support and resistance, okay, if it coincides where the market is, that is an indicator for you to trigger your trade. Okay, so there will not be very many, but they will occasionally appear as many. Let me see if I can just color them. They are very significant points. So if you look a point like, let's go backwards, okay, where all the three meet, all the three. So a place like here, all the three are meeting there, where all the three is the moving average, the support resistance, and the market. Okay, somewhere around there. Okay, where all the three meet, somewhere around there. Again, it's a zone, somewhere around there. Okay, where all the three meet. Well, they're not really meeting all the three. Nope. See, this is an interesting one because if you look at that, and then you look at that, the significance of that, okay, but you look at where all the three meet. Okay, so ideally, where all the three are meeting is supposed to tell you, it's supposed to be a trigger to enter the trade. So like this is a good one. This is a buy. Okay, it should give you plenty of profit. Okay, this one is a buy also. No, it's not a buy. That's not a good one. This is a sell. This one, I think, is just a consolidation. This one is a sell. Okay, and this one is a buy. So these indicators, which is support and resistance plus the simple moving average, are more like your cheat sheets. Okay, where they meet, you trigger your trade. Now, what I was saying before is this has a high accuracy, well, high degree of accuracy, but as you can see, it requires you to do quite some back testing. Once you've done some back testing and you know that actually it's working, okay, then now you can use the strategy with confidence. So like in here, the best way would be once you've put your indicators like that, where the indicator is the moving average, and you've put your support and resistance, then this is your market. You go back in time and ask yourself, did it obey the law? Did it obey the idea or what I'm trying to do? And you do that by literally moving the market backwards. Okay. So if you move the market backwards, there, you ask yourself, is it still obeying the idea? All right. On this, where they have met, is there a significant move? So here they did move downwards. A good idea. These things are not helping very much. All right. So we can say that this was good around there. There, not very sure. This one was good to the buy. Okay. And somewhere there, wow, this one is good. Okay. Remember the purple one is still part of our deal. But the question is, you'd have to wait for a long time for the next signal. Okay. In terms of 15 minutes, that's actually a couple of days. Yeah. So that's why I don't do indicators. But it gives you the security that you are doing the right thing. So again, if you move this again and you look in the past, this one here, pretty close. Actually, it is a good one, because from here, that's when it goes up, all the way up, and then comes down. So this would be a good place to enter a buy. Now here, another one. Remember, it's a zone. It's a good one where the price meets the indicator, meets support resistance. When they meet at one spot like that, it's a place to enter. In this case, a sell, because the market is coming down. And so it gives you all this profit until the next place here. And then this is a buy, because already it's reached the bottom and it's trying to go up. So this is your indicators. So Forex is not hard. People just make it very, very hard. But if you do everything correctly, everything is right there. For you, it is just to enter your trades once you know where to enter. Okay. Now, you get the idea. This is what we call alignment. Okay? The alignment is based on bigger time frame. We have marked this to a smaller time frame, and then what we've done now is we're just using like a cheat sheet, okay, support and resistance, to mark the specific entries where you'll enter the trade and hopefully where you can come out. Most of these trades, you'll enter them maybe on a buy to sell ratio. Maybe put your, like here, if you entered here, your stop would probably be there, the last low, and your take profit would probably be the last high, which would have been somewhere around here. Okay, which means by the time this one goes up here, you're out of the trade, or this one here. All right. So this is what we call alignment trading. So if I can repeat, the idea is the bigger time frames will always be duplicated in the small time frames several times. They will appear several times, which means you can have the chance to go in and out of the market several times doing the same thing. Okay, because a lot of these things you're seeing here, they are repeated in the bigger time frames, not this many times. So if you know that from the bigger time frame, generally it is a sell, then when you come to a smaller time frame, then you'll be, every time it goes up, you can enter the cells. Goes up, you can enter the cells, and so on, because the tendency, the general direction is a sell. Okay. And I think that's all I wanted to explain in the video. So I can make it open now for questions. All right. Questions? Okay, are there any questions? Or you still want to watch the video before you ask any questions? You still have the video there, but I'm here. If you want to ask, you can ask. Again, if there are no questions, then you can ask in the chat group, the group chat.
Did you share the YouTube?
Yes, the YouTube link is there. And yes, the video is clear. It has the same thing, same idea. I may have gone a little deeper here, but the idea is the same.
Okay.
So it is just one of many strategies. You pick and choose the ones you think you like this one, or the channel strategy. There are so many other strategies that we shall be going one by one. But ultimately, depending on your personality or the kind of trader you are, you can pick and choose which one works best for you. So for right now, Just be open to learn everything, whatever you can learn. And then later on, you can start specializing. But they say that somebody who is thin or hungry does not need to slim. They don't need to watch their weight. They don't need to be on a diet. So for now, eat everything and anything you can get. Well, I mean, of course, you have to know the source of what you're eating. So that is why I'm very protective of the group. If somebody tries to send anything, to forward anything without consultation, I either remove them. No, usually I either ask them to remove what they've put, and many of you may not have noticed, so sometimes they remove them very quickly. Okay? Because I feel like you should not go through what some of us went through. Some of us went through a lot of garbage, fake sites, people selling you this, selling you that. And so in the process, the end result is you lose a lot of money, you waste a lot of time because you're learning rubbish. And then it takes you a long, long time to become a consistent trader. Not just consistent, but eventually, of course, you start becoming profitable. So for right now, the important thing is for you to be able to be consistent, to be able to go into the market, to buy and sell, and be consistent in making profits, or at least positive trades, to be a good start. All right.
Hello.
Yes.
Yes, it's William.
Yes, William.
These moving averages, I've been trying some of them. Like someone told me to put like on the moving average, I have one which has 60. I mean 6.
Mm.
The other one is 18. The other one is 50, and then the other one is 200. So, what is the benefit of having different moving averages in the same at the same time, or like the one you just using one moving average? So, what are the benefits here?
Okay. Moving averages, depending on the strategy, and we'll get there. Depending on the strategy, it also depends on the time frame. Okay, a lot of the time frame, because you're doing moving averages mathematically. You're saying you want to look at the last 14 candles, okay, or the last 60 candles, or the last. So the bigger the time frame, the more candles you want to look. Okay, especially if you're a long-term trader. But if you're a short-term trader, sometimes. So right now, don't worry about all those details. But each strategy you start getting into, you'll read a little deeper. And many of the people who provide the strategies will explain to you why they want to use that moving average. Okay? What is the relevance of that moving average to that strategy? All right? But in theory, all the moving averages are just mathematical calculations of the last trades. No, the last size of maybe the candles you have there. So if you have, let's say, 7 candles in the last 1 week, or 5 candles, okay, mathematically it will calculate the high it reached and the low. It takes an average. Then the next candle, the high and the low takes the average. The high and the low takes average, high and the low. And that's what we call a simple moving average. Okay, so the moving average sometimes tells you the general direction or trend of the market. Yeah. So
Tom, if I may. Actually, I had the same question. Thanks to that gentleman.
Yeah.
Most people will you put this average, but they actually don't explain why that average. I know somebody who said, I put 13, another one put 50, another one says I put 200.
Yeah.
You just told 60, but you did not explain why 60.
Yes.
So this is very common. Why that number? I actually really want to know what's the significance of number that we choose to use.
Yes. And that's why I'm saying mathematically, there's a reasoning behind it. There are many people who don't know and don't give a reason. Okay? There are many people who don't explain why you're using a 7 simple moving average or why you're using a 50 simple moving average. Okay? So it's a sum total of many things, but in general, the moving average is actually a calculation. Okay? If you look at, am I still sharing or I stopped sharing?
You're still sharing.
Okay, good. So like this blue thing that's going up and down, if you look carefully, it's almost like trying to go between the high and the low, the high and the low. So if you take the high, if you take one candle, let me see if I can draw it. In the meantime, somebody is asking how they can join the group. I've just shared the WhatsApp number on the chat. Okay, so they can check on the WhatsApp number and join through that. So if this is a candle, so the moving average is basically saying take all right. So if you drew a moving average here, all right, so the moving average will go something like this. So mathematically, what does it really mean? What it means is you are taking the size of this candle, which is there, that's the low, and that's the high. Okay, you take an average of the two. Average of the two might be somewhere in the middle there. Okay, you take this low and this high, the average of the two will be somewhere there. You take this low and this high, sorry, oops, the average is somewhere there. You take this low and this high, the average is somewhere there. This low, this high and this low, the average is somewhere there. So then, oops, what am I doing? Okay, anyway, in general, then you draw a line that actually cuts through them like that. And this is price. This is price. Okay, I didn't want to explain the details, but you know, where you know that this was the opening price, this is the closing price of any candle. Okay, this is the highest it reached, this is the lowest, sorry, the lowest it reached. So again, on the next candle, same thing. This is the opening price. So to do all these calculations, they take open and close, open and close, open and close, open and close, take an average, and then plot it. Okay, and so this kind of gives you the average direction of the market. So if I was to remove these candles here and do just the charts, you'll see something similar, something very similar. So, but people who are training Forex often do not explain that. Okay? Either because they don't know or they just think it's so basic. So this is the Forex chart, but if you change, we can change it from being, let me see. From being a candlestick or to the bar chart, which I showed you before, but I'll show you the line. Okay, something like that. Okay. So I hope I've answered the question. I've gone round and round, but I hope I've answered the question. The reason why we use those averages is because there are a calculation, okay, of, oh wait, so like the simple 60, it means 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 1, 2, 3, 4, 5, 6, 7, 8, 9, 20, all the way to 60. So it takes the averages of all those 60 and then it draws this line. Okay, so each time you add a new candle, then below here we drop 1. We add 5 candles, you drop 5. You drop. Every time you add, you keep dropping on that side, so that you're always having an average of 60, 60, 60, 60, 60, 60. So if you put a 7 or 14-day moving period, it will change significantly from this. And maybe you may have to change the time frame. So, but that will be another whole lesson sometime very soon. But in principle, you use them to help you make decisions on the direction of the market, whether it's going up or down, in combination with the time frame you want to use. Okay, any questions?
I think we understand, but maybe what you didn't touch on, why you did not pick on 40 or you did not pick on 70, for example. Just that would help.
Yes, and that's why I was saying it requires another whole class of time frames and moving averages. Okay.
Okay.
So I would have to start from the beginning of what a simple moving average is, get back to each calculation, how you calculate one and the other, so that then eventually, in confluence with the time frame, what then is the best, and so on and so on and so on. So that is another whole class, but that will have to be another day. For today, I just need to know that with 60 or even a 50 moving average, that's like almost like you're saying, I want to see the average price. So whereas sometimes the market moves up completely off, but sometimes it comes down. But that line will give you the average price when it moves way up or when it moves way down. It gives you the average price, okay, in form of a line for simple moving average. So, but that in itself is a detailed discussion which I didn't want to get into, again, because of the mathematical nature of it. But for many other people, the capacity to understand it may not be there. And I'm telling you from a mathematician point of view, I'm a mathematician, and I know that mathematics is a bit complex. So you don't need to know that. All you need to know is you need to know for the strategy you're doing and why you're using that one. And in fact, even the why is not even necessary. You don't need to bog your mind with knowing the why. Just know that in my strategy, I need this indicator and this indicator. Why? Because this indicator will help me do this and that and that and that. But how the indicator comes to be, that's another whole story. Okay, any other questions?
My question would be, you were saying if you are looking at the hourly chart and maybe monthly chart and the rest, you're saying what they could be repeating itself if the monthly is going down or going up.
Yes.
Is there a situation where the monthly and the hourly are totally different?
Yes. Yes, they can be totally different in the sense that at that instance of time, the daily or whatever, the bigger time frame is showing that it's going up. And on the smaller time frame, at that point, maybe it is in one of the instances, it's actually going down. Okay, and that's why I'm saying if you're gonna plan to trade those kind of patterns, you have to recognize that the bigger time frame pattern will be repeated several times in the smaller time frames. Hence, there will be many instances they are all going in the opposite direction, but still focused on one direction. Now, that's an important question, and I think I need to share something. Let me stop sharing the chat, but I share a document that can explain that a little more. So just 1 second. Okay, but the idea is yes. Okay, there are times when one is going down, the other one is going up. The other one is going down, the other one is going up. Let me see. Okay. Okay. All right, I have a good picture. And good thing I am recording this, so I might even upload it in YouTube for you to review. All right. Just 1 second. Okay. Okay, this is a wonderful picture, okay, of what I'm trying to explain. So as you can see, the weekly chart on this illustration, okay, the weekly chart, this is the weekly chart. The weekly chart is on a high, on a, what do you call it? It's going up. All right.
An upward trend.
Yes, an upward trend. Yes, an uptrend. Okay, it's bullish. That's weekly. But now look at the hourly chart of the same market. At an instant like this one, somebody can argue and say, but it's going down. Yes, then of course it goes up again. Then it's going down. Somebody might say, oh, but that's, then it's going up again. And then it's going down. Okay? Yes, even here, it did go up, come down once, then go up. But here, we can see it's going up how many times? 1, 2, and maybe a third one there. But here it's only showing one time, or maybe this one 2. All right. But going down, it's only going down one time. Okay, X. But if you see this X, these are small mini X. Okay, mini X. Mini X. Now, this will probably be all the time equivalent to the weekly chart. Because if this is hourly, then this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, so all this here are small versions of this. So I hope I've answered your question. Does it make sense? Hello? Hello? Did I lose anybody?
It's clear, Tom.
Okay. Okay.
Hello, I think it makes a lot of sense because as much as in a smaller time, a smaller frame, there are ups and downs, many of them, but the general trend, if you look at it, the general trend is going up.
Yeah. Yep. And that's the idea. So once you know this is very powerful. You can use it for your trading. Now you wonder why somebody like me, okay, and I guess I didn't know this until much later, until I decided to become a scalper, why I can go in and within an hour, I can make the number of pips some people try to chase for 1 week or try to chase a whole day. I can go in and do my, because to me, from here all the way to there could just be like maybe, 50 pips or maybe 100 pips, from down here to there. That's fine. But for me, from here to here and down and then up here again, that could be my 100 pips just from down here, because I'll take trades going up, all right, because this is going up. But as I see this also, it still has a uptrend. As it's coming down, I will start buying. Why? Because I can see it going up again. It will come and revisit the last high, okay? And then it breaks out here, goes up, 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 up. As it's going up, I know it will start coming down again. As it comes down, I'm cognizant of the last low. It goes the last low there, pushes down a little bit, but pushes up. But as it's coming here, because I know it's on an uptrend, I will start buying even as it goes down. Okay? And then the market goes up with me, and so on. So again, it's a matter of understanding the charts, the pattern, and you trade the patterns. All right. I'll give space for maybe one other question or something. If not, you can type the questions later if there are no questions. I hope I've been able to answer all the charts. Yes, the materials are shared in the group. They can join the WhatsApp group, although we are very quickly here nearing the limit, so we may have to transition to a bigger group. Okay, we didn't realize there will be a surge like this. There will be the demand of wanting to know. Yeah. So what we shall do, we shall try and migrate to a different platform for our discussions. Okay. Any questions? Okay. I don't see any. If there are none, then yeah.
Mine is not more of a question, but just the strategy that you've just explained to me, where you use a shorter time frame, I'm using the long time frame. I'm kind of like also liking that type of scalping, because when I started doing this, but with your explanation, I'm understanding even what you're saying better. Yeah.
That's good. That's good. Yep. It didn't take me like 5 minutes to understand the strategy. Took a while. A lot of practice, hours and hours of practice. Okay. And so that's what I'm saying. It is not something that you will just do it one time and it clicks. It's something you have to do several times. You have to keep trying, okay, until you are now confident. So yeah. So, I don't know. Have I answered your question?
Me, yes, you did answer the question. I don't know about other people. Maybe
Okay.
others, what you're explaining could be way advanced for them, and that's why they don't have questions, because they don't know what is happening. So, yeah, probably.
Probably.
But I think I
Not really.
understand. Yes.
Not really. This is Alex here. I think, Coach, today's presentation has really demystified the whole thing of understanding timeframes and what to apply, which one to use. So I think it was really nice. It's really, really nice. I must commend you on that.
Okay. Thank you.
Yeah.
Thank you. Yeah. Remember, there's a lot more. Sometimes it's like I'm holding my tongue because I might start saying, and I'm saying too much, which might, for lack of a better word, might scare other people. As you can see, sometimes we lose people, right? They come into the group, then we lose them because they come and they realize, whoa, you know? So we have to be sensitive to other people too. When they come, we have to ease them into the kind of things we are doing. Okay.
Thanks.
But questions are always open. I like to answer questions, and that's why I take the time. I take the time to answer the questions and to give people a chance. Yeah. Okay. And there's no wrong question. Like I told you guys, at least for me, I know nobody was born knowing Forex. I didn't know Forex. I just learned. I taught myself. There was nobody to teach me. At least you guys, you are lucky, you know. So because of that, I feel like you guys don't have to go through what some of us went through. Yeah. Okay. Now, if you don't have any more questions, then you can call the night. Okay. We have the recording. I might also append this other recording into that, or we'll see which ones. We'll have probably two, part A and part B, so you can watch both if you want. Watch part A, then watch part B, and then take notes. Take notes. Take notes. Then go back to the platform, your platform you're using, and test the idea. Test the idea. The way we've just done that. We've just done. And you scroll backwards, and you see the moving average touching your support and resistance, touching the market. Then you get excited because you ask yourself, if I had entered that trade, how many pips could I have made? Okay. And you keep going back. That's called back testing. Because the more confidence you get in the idea, the more confidence you will have in going into the charts. And you'll start seeing that actually making tips is not very hard. It's actually doable. Okay. All right, friends, I think we can stop there. We cannot learn the whole Forex in one night. I have to give you time to assimilate, time to understand some more, and then we can add some more on Tuesday night. So please invite more people. I think we might have to move to Telegram. I will have to reset the Telegram group so that then the materials we are sharing, there's still a whole lot I want to share, but I don't want to download them all at once. I don't want to dump them all at you. That's why I'm trying to give you in doses. As you understand, then I add some more. As you understand, I add some more. Okay. But so we will have the Telegram group. At least that one has a capacity of 200,000. And then the YouTube, which we can put all our videos there. And my goal at the end of the day is for you to be a trader, so that maybe a few weeks from now, a few months from now, you and I can now start talking on the same level. Saying, okay, so how was your trade today? Okay, and we can start discussing, how can we do it better? Because I believe that iron sharpens iron. Once you know how to trade, you become good. When you become good, I can learn from you. we can learn from each other. And at that point in time, we can form a group that will trade together. And yes, we can trade together. But until we get there, in the meantime, we have to learn. So I'm doing my part, but you also need to do your part. And your part is learning, learning, learning. This is the time. Okay. With those remarks,
Thank you.
okay, you have a good night.
Thanks, Tom. Good night.
Thanks so much.
You're welcome. Thank you.
Thanks, Tom. And I just like the idea that you've just passed as the last remark, or where we'll be trading together. I'm just looking for that time whereby all of us will be doing that.
Yes.
And thanks for sharing.
You're welcome. You're welcome. Okay. All right. Good night. Work for you, work for me. All right?
Thank you. Bye.
Bye. Bye. Bye.